Hi everyone, welcome to today's video. So in the stock market, what usually retail investors do is that they buy low and sell high. This is very obvious. For example, if you buy ITC at 300 rupees and we will sell it off at 320 rupees. So this is called as buying low, selling high. So this is the objective with which we operate. What ends up happening is that we build it into our brain that we will only buy stocks when they are falling because we will get to purchase something at a discount, and then it is very likely that it will go up and then we will sell it off and make money. Now, there is nothing wrong with that strategy. Even I apply it a lot and I purchase many of my stocks using this strategy. But there is another strategy that I use. It is called as momentum trading strategy. Under this strategy, what you do is that you buy something high and then you sell it when it goes higher. Now, I'm going to explain this strategy in very simple, easy to understand language, and you don't need understanding of any technical indicators while applying this strategy. People are charging lakhs and lakhs to teach such strategies on their technical courses. If you do like the video, do at least press the like button. It will help these type of videos reach out to more people. So with that said, let us kickstart our discussion. And point number one is that we will quickly understand what momentum trading strategy is and what momentum investing strategy is. Now, here is a picture of Richard Dreyhouse. So he is considered as the father of momentum investing, so to say, and he made a lot of money using momentum investing. On the flip side, you have investors like Mr. Warren Buffett, Charlie Munger, who do not believe too much in momentum trading or momentum investing. So what is the theory behind the momentum investing? Let me explain that by using Nestle's example. So if you take a look at Nestle's chart, and if you would have purchased this stock at any of these points, right? Any of these points. For example, you would have said that, hey, this has made a high, this has made a high here, this has made a high here. You could have still exited this stock at point number 4 and made money. Even if you would have decided to purchase Nestle at point number 4, you could have sold this off at this new high, point number 5. Or if you would have purchased Nestle at point number 5, you could have sold it off at point number 6. So what are you doing? You are buying high and selling higher. This is what momentum trading and momentum investing is. Now, what is the difference between momentum trading and momentum investing? This is a very important point for you to understand as a retail investor, because traders or momentum traders do not make a lot of money. And there is hardly any study that has been done on momentum investing per se. I do not know the data there, whether they are making more money or less money, but I will explain you some critical differences between these investing styles, and then you can make a call what you want to do. Now, when it comes to momentum trading, you genuinely do not bother too much about the underlying quality of the stock. You are just going by the price of the stock. If the stock of the price is rising and the technical indicators are telling you that, you know what, just purchase this kachra penny stock and you buy it, you trade the momentum, you get out. Okay, great. So that's one way of making money. But in case of momentum investing, you are purchasing fundamentally good stocks. So this is one key critical difference between momentum trading and momentum investing. So please keep this viewpoint in mind as we discuss the video. Now comes the second point that, hey, while doing this momentum trading or momentum investing, there are a bunch of technical indicators like MACD, RSI, bunch of different chart patterns, volume analysis happens. Should you be doing it? Should you not be doing it? It really depends on what your system is. I will explain you some aspects of my system. I can't put everything together in one single video. That will get too long. But I will explain what I do, what my broad system is. That is not the only system that you can follow. You can pick other systems also. But my system makes money for me. So I'm explaining that to you. So I hope these basic points are clear. And a related third point here is that what type of momentums are there? So here, let me pick the example of ITC and let me show you some critical points. So here what you would see is that this is a very clear downward momentum. This is a sideways momentum and this is an uptrend momentum. Now, momentum can be judged from very short term, long term, mid term, and your head will hurt if you start studying all these things and start getting into excessive details. So now let me help you simplify the framework, that what are the things or practical things that you need to do in order to execute this strategy and make money from it. So let me very quickly explain you the setup of this strategy. So what you need to do is that you need to first and foremost identify whether the stock is trading at its 52 weeks high. A classic case in point would happen somewhere in this zone, that here, if you go back almost a year back, Nestle was trading at its all-time high and now it has made that previous high again. So basically in step 1, what is happening is that you must identify the 52-week high and that should be a repeat. So that previous high should have been achieved at this previous point also. Now 52 weeks is just an indicator. Please do not start creating ruckus that, hey, it's only like 49 weeks or only 51 weeks. No, please don't do that. Please use a little bit of logic. This is just an indicator. So this is point 1. Point number 2. Now, if the trade goes your way, sell it at 30% gain. So for example, here you can categorically see that the stock gave a run up of roughly 32-33%. Sell it off, go out. But on the flip side, something negative can also happen because the momentum can turn bearish. So in such a scenario, what might have happened is that you purchased this stock here and then it started falling. So in such a scenario, please get out of the stock at 15% loss. So book the loss, move away. Now you'll say that, Akshat, how is this a guaranteed strategy? No, it is not a guaranteed strategy, but this is mathematically sensible strategy because your risk reward is 2:1. If the strategy wins, you are going to make 2x money, and if the strategy loses, you are going to lose x money. So from a mathematical point of view, the strategy makes sense. So let us test this out strategy again and see whether it actually works or not. So let's say that this is 1A and you got an opportunity to buy it at 1B. You purchased it. You made 30% profits here. You sold it off. Now, what about point number 2? So again, this has been a significant lag. So here is the previous peak, 2A. You don't buy it here. You buy it at 2B when it makes the previous peak again. And did you make 30% gain again? Yes, you made 30% gain roughly. You should have sold it off and went out. Now, do you purchase it here? The answer is no. You don't purchase it here because there has been no previous 52 weeks high that has been made at this particular peak. So we avoid it. When do we purchase it again? So we purchase at somewhere here. So I'm marking it as 2C. So what is happening here and when you should get out of Nestle if you have purchased the stock? So right now the stock has given roughly 7.5% return, and when the stock gives approximately 30% returns, I will be selling some portion of my Nestle because I have purchased some bit of Nestle using this strategy. So now let me talk about final 2 points. So a natural question comes that, okay, Akshat, what type of stocks should we trade in by using this strategy? You should only do it in fundamentally strong stocks. Now, what is the definition of fundamentally strong stocks? Please continue to watch my videos. You will learn a lot. I also talk about it quite extensively on my stock market course. In case you want to learn about it in a structured manner, you could consider joining it. But just so you don't make any major mistakes, let me just open up Screener and teach you how you can put some filters so at least you're not making a major mistake here in terms of identifying firms. So you go on Screener and you type on screens and you create screen, and then you go and type out this query. So you can literally copy paste it. So what this does is that this helps you companies that are trading at almost their 52 weeks high. Second, it helps you identify companies where the market cap is more than 25,000 crore. So these are fairly big companies and these are low debt companies. So if you run this query, you will at least get 60-70 odd companies which you can go and scan through. This is not a perfect list. You will have to refine it further using many parameters, but at least this way you are not trading in some bad companies. Now comes the final point that, hey, what are the risks associated with this particular strategy? Okay, so every strategy comes with its own set of risks. The number one risk is that you will make a mistake in terms of identifying good assets. Many of you, after watching this video, I'm sure that you would apply this strategy in penny stocks, this stock, that stock, and then from next video onwards, I'll get a lot of feed that, you know what, Akshat, I applied this strategy in this stock. I lost money. You are to be blamed. No, I am not to be blamed. I am telling you very categorically that you should be applying this strategy only for good companies. This is point 1. Point 2, this is a mix of trading and investing. So you are neither a trader nor an investor here. If you are a pure trader, pure investor, please ignore this strategy. Please move on. You don't need to learn this. Third key point, you need to apply diversification in this strategy. Please do not put all your money on Nestle because it is at that level. Please don't do that. The reason why I shot this video was fairly simple because markets are recovering and I can identify at least 5 really good stocks using these strategies. You tell me in the comment box which good stocks are fitting this particular strategy. What I will leave you with is that, for example, if you have to invest, let's say 1 lakh rupees using this strategy, at least subdivide that into 5 to 10 stocks. Finally, how much money do I make using these type of strategies? I do fair bit of momentum trading and investing. For example, when I'm purchasing Nestle, Hindustan Unilever, etc., it's not as if that it's pure like long term. I'm never going to sell it, nothing like that. If there are profit booking opportunities as per this strategy, I would be doing it. I hope you enjoyed the video. Please press the like button and I will see you soon.